Hello. In this video, we are taking a look at Intel and AMD. It is a comparison that I wanted to make because both companies appear to be rather appetizing lately. And Intel, for example, has gone down a lot, and I have talked about it in quite a few videos in the past. It's becoming way too appetizing to just ignore. And you will see that right now, sitting at 29 bucks, it's down almost 50% from its 1 year high. Now, we have talked about the company, and I did also make a video when they had their recent earnings report, which was rather bad. It was, frankly, rather terrible. But the thing is, when we're looking at a company of this sort, which is obviously a fantastic company, a fantastic long term hold potentially, the thing is, it is going down with the rest of the market, and it has exaggerating movements just because it has had a bad quarter, yes, and obviously the stock market is sort of like crashing as a whole. So this kind of situation can actually help exaggerate the movement to the downside, and this is why you are getting a stock price that you would more than likely never really see when we were if we would be in a bullish environment, because the stock would potentially go down maybe, I don't know, like 10%, and then 2 months from that it could go up 15%, because it would be an opportunity amidst a bullish market. Now the thing is, when things are going down overall, you are looking at a company's stock price pretty much plummeting with the rest of the stock market, and getting again an exaggerated movement on the downside because of that. The thing is, if you take a look at the P/E ratio and the price to free cash flow ratio, for instance, of the company, is outrageous right now. Intel, trading at 30 bucks or even 29 over here, is sitting at a P/E ratio of 6, which is insane if you ask me, for a company of this sort. And yeah, they had their troubles, and they didn't do well. They actually did badly in the most recent quarter. But this doesn't mean that this company is worth $29. And in this video, we're going to be examining it and comparing it to AMD, as I mentioned earlier. We're going to be taking a look at both of these companies and see which one it would make more sense to potentially purchase. Because AMD right now, there's a lot to be said about AMD because it has been getting a large piece of the pie pretty much. And so, getting a lot of market share is nothing to sneeze at. We need to be taking this into consideration. Now, it's going to be a little bit of a fine line. Which one is the best buy? Could be a combination of a cheap one and a good one, or a better one and a more expensive one. So this is what we're going to be examining here. To start off, Intel here, you will see that the P ratio again of 6 and 12 for the price to free cash flow ratio is outrageously low, and you'd love to see that. In fact, I would have more than likely already bought this company if it wasn't for the dividend, which I'm not a huge fan of. I've talked about it in the past. We're going to be taking a little bit of a closer look. But first things first, easy to see here that the company has a little bit of extra total liabilities compared to the free cash flow that they generate, but their margins are amazing here. And in terms of their revenue growth, net income growth, it's been okay, but not great. And this is more than likely going to be suppressed in the upcoming years, maybe a couple of years or so. Net income growth also has been doing well, but again, pretty much slacking in the most recent years. Free cash flow growth has been basically a little bit bad in the past few years as well. And total equity growth that has been growing, the total equity of the company has been growing. Now, the company is buying back shares, and we do know that their free cash flow has been going downwards because they are actually investing a ton in their capital expenditures here, looking to expand, which is something that I generally speaking like to see. So this kind of negative figure here is not reflective of what kind of free cash flow the company generates, frankly. Now, again, the dividend that the company is paying is about 5% right now, as you'll see, and we can always be taking a look at the dividend stub here, see the finer details. 5% is the one that they are paying if we take a look at today's stock price pretty much. This is the last 12 months, so it's about the same, and you'll see that they have been increasing their dividends. Now, there is an issue with the dividends that I never like. There are a couple of issues, really. The thing that I've mentioned in the past is the taxation thing, because dividends are actually taxed twice. They are taxed in the corporate themselves, like when they're actually retrieved as part of the net income of the company, they are taxed then. And also they are taxed when they are distributed to shareholders. They are taxed at an individual level as well. So it's not really great because of that. They are not very efficient. Apart from that, the fact that the company pays dividends also extracts cash flow from the company. This is another thing that I really don't like, because it actually makes it tougher for a company to grow, because they're spending this money that they could be spending investing in themselves and making their business better. They're actually having to spend that now to shareholders. On the other hand, if you are a shareholder and you are getting a 5% dividend yield, that's not bad at all, because of course a company like Intel is more than likely going to be around in, let's just say, 10 years. And so if you're holding this for the long term, you're going to be paid 50% of your investment just from the dividends. And apart from that, more than likely the company is going to be much, much higher in terms of its stock price in 10 years from now. And so this is more than likely a win-win situation. And this is why I think Intel here is a fantastic opportunity and a really, really good investment. Now I'm going to use our tool here to jump to AMD. Of course, we can use our tool. You can gain access if you are a Patreon. You can find a link in the description box below this video if you're interested in becoming one. And you will see here that we have switched to AMD, which is another fantastic company that is also down 50%, which is amazing considering the fact that the company has been doing much, much better in terms of its market share compared to Intel, which has a bigger market share but hasn't been doing that well comparably. And you may be wondering, why is this stock also down 50%? It's actually more than 50%, more than Intel. And the reason is that it was overpriced. It was much, much overpriced. And you will see that even now that it's down 53%, it is still overpriced, but not as much as it was before. As you'll see, at some point it was like almost near 200. It's still potentially a little bit overpriced, but nowhere near how much overpriced it was in the past. But you will see they have been diluting shareholders quite significantly here. However, the growth that the company has achieved, you will see that this is amazing as well. And this is a company that I would also like to own, especially now, for instance, where you wouldn't really expect them to keep issuing more shares here as the stock price is going down, and it's reaching an equilibrium where it's going to be cheaper. Maybe they will sell some more right now because it's still potentially a little bit expensive. But again, you don't expect them to keep pretty much issuing that many shares as they were issuing in the past, because they were taking advantage of the very, very high prices over here, as you can understand. Now, this company, you will see that has a little debt, very little debt, and you can see it here in the total liabilities and the debt to equity ratio over here, but it's not paying any dividends. And frankly, this is actually a thing that I really, really like. Their margins are not as good recently as Intel, as we're seeing here. But again, we're expecting all these companies to have suppressed margins for a while. Now, they are not paying dividends, and the thing with that is that they can utilize all this extra free cash flow for for their business, for the business themselves. And AMD has been increasing their free cash flow like madmen here, like maniacs. And it's awesome to see. This is again a company that would be a fantastic hold over here. The problem with a company like AMD arises from their valuation here. And we can very, very quickly take a look at our stock evaluation tool. And you will see this. We're going to do that with Intel as well. Again, using our tool here, you'll see that the company's revenue growth has been at about 32%. The company has been growing tremendously well. Let's just go 15, 18, and 21, which may be a little bit too much, but let's just try that. And you will see that with a net income margin, 5-year average has been almost 11%, but recently much, much better. The company achieving nice profitability at a much, much better pace. And let's just try here 17, 18, and 19. And the free cash flow margin that we're going to be using, 80, 90, and 100, a very typical one, and 13% for our annual return. And for AMD, what we're getting here is an expensive price. As you'll see, we're still a little bit off. It's not super expensive, but it's still more expensive than I would like. Maybe $50 would be an interesting price to pay for AMD, but at 76, I think it's still a little bit expensive. Now, if we jump to Intel, which has been completely annihilated recently, and we have seen that with our tool, we can actually make our projections here as well. Now, Intel won't be growing nearly as much, and that's a problem with Intel. It's a very, very large company that is not growing a ton recently, and it's kind of moving sideways, as you'll see. They have had some years where growth was nice, but recently we are looking at numbers close to zero here. So I'm gonna go conservative. I'm gonna go 1, 2, 3 here. And for the net income margins, the company's margins are pretty solid over here, 25% in the past few years. We're gonna go, let's just say 20, 22, and 24 over here. And again, this can be a little bit more suppressed in the upcoming maybe couple of years or so. We're going with what history has been telling us. And again, this is an estimate, and getting access to the tool, you can use your own estimates, of course. The free cash flow margin that we're going to use, the same one, 80, 90, and 100, which is fairly typical, is close to what the company has been doing, 13% for our annual return. And you will see with that for a company like Intel here, we are solidly in the green over here, even with a 1% revenue growth here and 20% net income margin. We are still looking at 42 with the current price being 29. We are very, very cheap over here, and even let's just try 0%, like no growth at all for the next 5 years, and let's just say 15% for our net income margin here, and you will see that we are still in the green. So this company is very, very cheap right now. So what I'm seeing here when I compare these two companies, I like both of these companies, of course, and I do have a preference for companies that grow a lot, so I do like AMD in that sense. But AMD is a little bit more expensive, and it does get a point from the fact that it's growing. But remember, it's much, much smaller than what Intel is, and so they have much, much more room to grow. And Intel is a much more established company, less room to grow, yet the stock price is very, very cheap here. Now, again, there is the thing to think about the dividends. Intel is paying a dividend which I don't like, and is probably the core reason why I haven't bought it yet. However, it's extremely cheap, and AMD is not paying a dividend, can use the money to actually grow, but they are more expensive. So when we're talking about which one I would buy today, if I would want to buy one today, that would hands down be Intel, because I like cheap stuff, and I know that this current situation with Intel is not going to last. At least that's what I think. It may last for a few months, maybe a year, but I really, really don't think it's going to last for more than that. At some point it will go back to normal, and going back to $40 at least, I think it's going to be happening pretty soon, especially when we get out of this current market situation. I think this is bound to happen for a company like Intel. On the other hand, AMD is expensive, but not nearly as expensive as what it used to be. It's much, much cheaper now. And so it may be a potentially interesting opportunity, especially if it drops a little bit more. Now remember, this company, again, if I go back to Intel over here, again, we can use our tool to quickly see that. You will see that it was at some point 164, so double what it is today, pretty much, and more than that, actually. And again, you can see that it has fallen quite significantly from its recent peak. And its recent peak was abrupt as well, like it was sort of like very, very quick. It happened in the span of like a year or so. So, you can potentially have an argument against this company in the sense that it has been very, very overpriced, and right now it's still kind of overpriced. Again, not as much, but still rather overpriced, and it's also issuing a ton of shares. Little debt as well, though, but which is a good thing, and great growth. So again, between these two companies, I think that today I would be buying Intel if I were to pick one of the two. But if AMD keeps falling and reaches maybe 50 or 55 or something of that sort, then it would become my preference, frankly. And I would potentially even think about adding both in my portfolio. I do really like Intel right here because it's extremely cheap. That's what I think. But AMD, again, if it keeps going cheaper, it may be a fantastic entry. Do leave a comment below and let me know what you think, which one of the two you prefer. And if you did enjoy this kind of video, please leave a like and subscribe if you are new around here. And I'll see you in the very next one. Thanks for watching this one. See you soon, guys. Bye-bye.